If you're interested in Forex but have never traded before, you'll eventually run into the subject of which currency pair is the safest to trade so you don't lose half your money on your first deal. And the answer is as straightforward as it gets. The most stable currency combinations are the safest. Hello everyone, welcome to my YouTube channel, your favorite financial channel where matters relating to finances and businesses are being ironed out. All currency pairs are traditionally categorized into three divisions in the FX world: exotics, minors, and majors. Trading volume, liquidity, and volatility are used to classify securities. Exotic pairs, for example USD MXN and USD TRY, feature at least one currency from a developing country. They have exceptionally high volatility, which means that their prices fluctuate dramatically, often in a matter of seconds. The number of market participants who trade exotic is tiny, which indicates that their trading volume is also small. Because when you purchase or sell one currency, you automatically sell or buy another. Currencies are always traded in pairs. There is a base currency and a quotation currency in every currency pair. The base currency appears first and the quote currency appears to the right. The price shown for a currency pair is the amount of the quote currency required to buy 1 unit of the base currency. The EUR-USD currency pair, for example, has EUR as the base currency and USD as the quote currency. If the quoted price is 1.2000, 1 euro is worth $1.20 in US dollars. Different types of Forex pairs. In general, Forex pairs can be divided into three groups. The majors, commodity currencies, and cross currencies are as follows. Major currencies. The most widely traded currencies are known as major currencies. Although opinions range on the number of important currency pairs, most lists include EUR-USD, USD-JPY, GBP-USD, and USD-CHF. Commodity currencies. Commodity currencies are currency pairs whose value is strongly linked to a commodity like oil, coal, or iron ore. The commodity currencies AUD-USD and USD-CAD are covered in this list. Cross currencies. Currency pairs that do not include the US dollar are known as cross currencies. EUR-GBP and EUR-JPY are two cross currency pairs that have made it into the top 10. I believe we all know the types of currency pairs that we have, but how about we go through all pairs one after the other? That sounds great, right? Let's dig into it. EUR-USD. The EUR-USD currency pair accounts for the majority of the total trading volume. Because it combines the currencies of two big markets, this pair has a lot of liquidity. The pair has a positive relationship with the GBP-USD and a negative relationship with the USD-CHF. The overlap of the European and American trading sessions is the optimal time to trade the pair. I believe everyone loves to be in profit, and the reason why we trade is to make a profit. So as a result, if you are a trader who does not enjoy taking too much risk, this could be one of your greatest Forex trading possibilities of pairs. That sounds great, right? Furthermore, due to its popularity, you can often obtain a wealth of information about the EUR-USD on the internet, which can help you avoid making costly mistakes. GBP-USD. Another popular currency pair is the GBP-USD. The pair has a positive relationship with EUR-USD and a negative relationship with the USD-CHF. When trading the quote-unquote cable GBP-USD, all big news that could affect US or British currencies should be considered. Certain commodities, such as the base metals and Brent crude oil, are positively associated with the British pound. As a trader, you should always have it at the back of your mind that higher gains come with a higher risk. This is a pair of currencies that can be classified as volatile. On the other hand, many Forex traders prefer to use this as their preferred trading strategy because that they can obtain lots of market analysis material online to assist them. USD-JPY. The second most traded currency pair is USD-JPY. Because the US dollar is the base currency, it positively correlates with USD-CAD and USD-CHF. Traders can profitably trade USD-JPY during Asian and North American trading sessions, particularly following major economic developments in Japan or the United States. USD-CAD. Because the US dollar is the quote currency in all three pairs, the USD-CAD currency pair is adversely associated with the GBP-USD, AUD-USD, and EUR-USD. The quote-unquote loony USD-CAD is heavily influenced by oil prices because the Canadian dollar is a commodity currency. As a result, traders of this pair should keep a careful eye on OPEC meetings. The operational hours of the North American trading session are, understandably, the most active trading time for the pair. AUD/USD. Because the US dollar is the quote currency in these circumstances, AUD/USD negatively connects with the USD/CAD, USD/CHF, and USD/JPY. When there is a relevant news in Australia, trading the pair may be profitable during the North American or Pacific trading sessions. USD/CNY. USD/CNY is one of the most unusual pairs on the list. China's economy is strong, resulting in a stable currency. The pair's moderate volatility allows traders to profit from daily movements without risking too large price swings. USD/CHF. The USD/CHF pair, sometimes known as the Swissy, combines two safe haven currencies, the US dollar and the Swiss franc. The GBP/USD and the EUR/USD negatively correlate with the USD/CHF. Swiss and US interest rates, GDP, and employment data are the most essential statistics that predetermine the quotes. The optimum time to trade the pair is usually when the European and North American trading sessions coincide. GBP/JPY. Unlike the previous currency combinations, GBP/JPY does not include the US dollar. It is heavily influenced by happenings in Japan and the United Kingdom. The pair can form strong trends, allowing traders to gain a large number of pips on a single trade. Trading this instrument can benefit from a brief time of overlap between the Asian and European sessions. EUR/CHF. Even though EUR/CHF, Euro Swiss franc, is not a major currency pair, traders like it because of its inverse relationship to EUR/USD. During the European session, the EUR/CHF liquidity reaches its peak. The European Central Bank releases, European employment rates, and import-export data are all watched by those trading the currency pair. Switzerland's GDP numbers, inflation rates, and employment rates can all have an impact on the Swiss currency, so traders should keep an eye on them. NZD/USD. The New Zealand dollar and the United States dollar are common minor currency pairs. The NZD/USD and the AUD/USD have a favorable relationship. The Reserve Bank of New Zealand and the Federal Reserve's interest rate movements are the most significant variables to watch while trading the pair. So now that we know the top 10 best Forex pairs, which pair do you find easy to trade as a trader? Let us know your thoughts in the comments section below. And if you enjoyed the video, don't forget to like, subscribe to this channel, and remember to hit that notification bell icon so you won't miss any of our upcoming videos. Bye!